Welcome back to the Daily Crypto Roundup. Today, the market is not exploding higher, but it is not collapsing either. Bitcoin is holding around the $64,000 area. Ethereum is still trying to stabilize. XRP is stuck in that frustrating zone where the story sounds stronger than the chart, and the wider crypto market is once again being pulled between two forces: real adoption on one side and macro fear on the other. And that is really the theme of today's episode. Because on one hand, we have Bitcoin being watched as a macro asset, with traders looking at Iran, the Strait of Hormuz, oil prices, and ceasefire talks. On the other hand, we have Wall Street still building more Bitcoin products, Ripple pushing XRP and Ripple USD into AI payments, and strategy still sitting right at the center of the corporate Bitcoin treasury debate. So today, we are going to start with Bitcoin and the renewed Hormuz risk. Then we will get into the Ethereum MEV bot that was drained for $7.5 million, which is one of the most ironic crypto security stories you will hear. After that, we will move into XRP, because XRP is still struggling to hold $1.15, even though the fundamental story keeps improving. Then we will look at strategy, Adam Back's defense of its small Bitcoin sale, Franklin Templeton's new Bitcoin dividend idea, Ripple's AI payment push, and finally Hester Peirce leaving the SEC in November. And as always, this is not financial advice. This is the real crypto news, broken down properly, without the panic, without the hype, and without the nonsense you see flying around on social media. Before we get into it, if you are using exchanges, wallets, or crypto platforms, make sure you understand the risks, use proper security, and never invest more than you can afford to lose. Kraken is one of the names many people use when they are buying, selling, or managing crypto, but always do your own research and make your own decisions. And remember, we are giving 20 XRP to listeners who sign up using our link. Just message us once it's done. Now let's get into the market. Bitcoin has been holding near $64,000 after recovering part of Friday's drop. Bitcoin was trading around $64,200 on Sunday, up slightly over 24 hours, but still basically flat on the week. That tells you the market is not dead, but it is also not convinced yet. Bitcoin dipped below $63,000 on Friday, recovered over the weekend, and now traders are waiting for the next big macro signal. The big issue is the Middle East again. Markets were previously boosted by the idea of a US-Iran deal and a reopening of the Strait of Hormuz, which helped pull oil prices lower. But now, the risk is back because Iran has renewed the threat to close the Strait of Hormuz, even while ceasefire talks are due to take place in Switzerland. And this matters for Bitcoin because Bitcoin is not trading in isolation anymore. It is not just a crypto chart. It is now tied into the bigger risk asset picture. If oil spikes because Hormuz closes, inflation fears can return, risk appetite can fall, and Bitcoin can get dragged down with equities and other speculative assets. But if ceasefire talks go well and the Hormuz risk cools again, then that pressure can lift, and Bitcoin could get room to move higher. So the key level psychologically is simple. Bitcoin needs to keep defending this $63,000 to $64,000 area. It does not need to go crazy today. It just needs to avoid breaking down while the macro picture is messy. The market has spent a lot of June reacting to headlines rather than crypto-native catalysts, and that is exactly what we are seeing again today. Now from Bitcoin's macro story, we move to Ethereum, and this one is wild. Ethereum's biggest sandwich bot, known as Jared from Subway.eth, has reportedly been drained for more than $7.5 million. The attacker did not use a normal phishing attack or a simple contract exploit. Instead, the attacker tricked the bot's automated trading logic by creating fake tokens and fake liquidity pools that looked like profitable opportunities. For anyone who does not know, a sandwich bot is a type of MEV bot. MEV stands for Maximal Extractable Value. In simple terms, these bots look at pending transactions, jump in front of them, force the user to get a worse price, then sell straight after. It is not usually classed as a hack, but it is widely seen as predatory because it extracts value from normal users trading on-chain. And that is why this story has such a big irony attached to it. The bot that spent years profiting from other traders' transactions was itself tricked by someone else. The attacker spent weeks setting up fake contracts and fake trading routes that made the bot approve malicious helper contracts. Those approvals were then used to drain wrapped Ethereum, USDC, and USDT. Some funds were later routed through Tornado Cash. The bigger point here is not just a bot got hacked. The bigger point is that automated systems can become victims of automation too. If a trading bot is designed to react at machine speed, it can also be manipulated at machine speed. And as crypto becomes more automated, more AI-driven, and more bot-heavy, this kind of attack surface becomes more important. So yes, there is irony here. But there is also a serious warning. The future of crypto is going to involve more bots, more agents, more automation, and more smart contract interaction. That can make markets faster and more efficient, but it also creates new ways for systems to be tricked. Now let's move to XRP, because this is the part of the market where the story and the chart are arguing with each other. XRP is still struggling around $1.14 to $1.15. The big question is why XRP cannot hold $1.15, and the answer is basically this. The bullish story is still there, but the chart has not confirmed it yet. XRP lost the $1.15 level after a heavy volume move, and it continues to struggle against a descending structure that keeps rejecting rallies. And this is important for XRP holders to understand. Good news does not always move price immediately. Sometimes the market knows the story, prices some of it in, then waits for confirmation. XRP has a strong fundamental narrative around Ripple adoption, ETF speculation, lower exchange supply, institutional interest, and regulatory progress. But the chart is still saying, show me the breakout. XRP has been trading near $1.14, with bulls defending the $1.10 support area, while $1.20 remains a key level that XRP has failed to clear. That gives us a very clean framework. Below $1.10, the market starts looking weaker. Above $1.20, the bulls can start arguing that momentum is coming back. But stuck between those levels, XRP remains trapped. So for XRP, the message is not panic. The message is patience. The story is not dead. But until price breaks the structure, the chart is still winning the argument. Now let's talk about strategy, because once again, Michael Saylor's company is right in the middle of the Bitcoin treasury conversation. Adam Back has responded to concerns around strategy selling a small amount of Bitcoin. Back argued that the sale was not a bearish signal, but a normal treasury management move. Strategy reportedly sold 32 Bitcoin for around $2.5 million to fund preferred stock dividend payments. That is a tiny amount compared with the scale of Strategy's Bitcoin position, but people reacted because Saylor's entire brand has been built around buying and holding Bitcoin. So when Strategy sells even a small amount, the market notices. But Adam Back's point is worth taking seriously. If a company builds a Bitcoin-backed financial machine, then small movements around cash flow, dividends, and treasury obligations are not automatically a betrayal of the Bitcoin thesis. They may simply be part of running the structure. That said, this is also why Strategy remains one of the most important companies to watch in crypto. It is no longer just a company holding Bitcoin. It has become a live experiment in whether Bitcoin can support a large, public, corporate capital structure. If that model works, it strengthens the institutional Bitcoin case. If it comes under pressure, the market will watch very closely. Next, Franklin Templeton is pushing another interesting Bitcoin product. Franklin Templeton has filed for Bitcoin DRIP ETFs. The idea is unusual but clever. These proposed funds would start with a mix of US stocks and Bitcoin exposure, then use the dividends from the stock holdings to automatically buy more Bitcoin over time. That matters because it shows where Wall Street is going next. The first wave was simple Bitcoin exposure. Then came spot Bitcoin ETFs. Now we are seeing more structured products where Bitcoin gets built into familiar investment systems. A dividend reinvestment plan is one of the most boring traditional mechanisms in investing. You get dividends, and instead of taking the cash, you reinvest it. Franklin Templeton's idea is to point that mechanism at Bitcoin. So ordinary equity income gradually becomes Bitcoin accumulation. The funds are not approved yet, and they may never launch exactly as proposed. But the direction of travel is clear. Wall Street is no longer asking whether Bitcoin belongs in portfolios. It is asking how many different ways Bitcoin can be packaged, allocated, automated, and sold. Now back to Ripple. Ripple is expanding its artificial intelligence focus as the XRP Ledger adds support for AI agent payments using XRP and Ripple USD. The XRPL AI Starter Kit is designed to let developers build applications where AI agents can send, receive, and manage payments on the XRP Ledger. This is a big narrative because AI agents need payment rails. If software agents are going to pay for compute, data, services, subscriptions, APIs, or transactions without constant human involvement, they need fast, low-cost, programmable settlement. That is where Ripple is trying to position XRP and Ripple USD. XRP can act as the native asset. Ripple USD can offer dollar-based settlement. And the XRP Ledger gives developers fast settlement, predictable fees, and built-in exchange functionality. This does not mean XRP automatically moons tomorrow, but it does give XRP another utility narrative beyond the usual bank payment story. AI payments could become a serious sector, and Ripple clearly wants XRP Ledger involved. Finally, Hester Peirce is leaving the SEC in November. Peirce, often called Crypto Mom, said she will leave the SEC and join Regent University School of Law. Her exit matters because she has been one of the most visible crypto-friendly voices inside the agency. Peirce has pushed for clearer digital asset rules, criticized enforcement-first regulation, and helped lead crypto policy discussions at the SEC. Her departure does not mean the crypto agenda stops, but it does remove one of the industry's strongest advocates inside the commission. So that is the regulatory note to end on. Crypto still has momentum. Wall Street is still building. Ripple is still expanding. Bitcoin is still holding. But regulation, macro risk, and market structure are still the forces deciding how quickly this next phase can move. And that is today's roundup. Bitcoin is holding near $64,000, but the Strait of Hormuz risk is still hanging over markets. Ethereum has just seen one of the most ironic MEV stories in years. XRP has strong fundamentals but still needs a real breakout. Strategy is defending the logic of its Bitcoin treasury model. Franklin Templeton wants to turn stock dividends into Bitcoin. Ripple is pushing XRP and Ripple USD into AI payments. And Hester Peirce is preparing to leave the SEC at a critical moment for crypto regulation. The market is not simple right now. But that is exactly why we follow the real stories. Like and follow. And as always, we will see you at the top.